This is your technical update from the LMAX Exchange Research and Analytics Desk for Friday, July 15th, 2016. Euro dollar. So not much going on with the euro right now. The market's been consolidating below a key high at 11.87. At this point, the pressure remains on the downside while the market holds below 111.87, with risk for deeper setbacks towards next key support at 109.12, which is that low from the 24th of June. If we do see a break back above 111.87, this would take the immediate pressure off the downside and open the door for the possibility of a more significant upside back towards the recent high at 114.28. Sterling dollar. So cable, as we know, has remained is locked in a very well-defined downtrend after the market last week put in a plus 30-year low all the way down just below 128. At this point, though, we're seeing a bit of a correction play out with the market taking out the previous weekly high. This does set up this possibility for a deeper correction or more significant correction to the top side over the coming week, with the market potentially extending up towards some previous support now to resistance in the 138 area. However, the downtrend does remain firmly intact, and any rallies are viewed as corrective ahead of what should be the next downside extension to retest those recent lows just under 128 and potentially for a move down towards 125, which is the next key psychological barrier. Dollar yen. So dollar yen has seen a very impressive rebound in recent trade out from those recent 2016 and multi-month lows at 98.99. But while the market holds below 106.81, the pressure does remain on the downside with the downtrend intact. A break back above 106.81 would be required to take the pressure off the downside and suggest that the market could be putting in a more significant base. Euro Swiss. Not much to talk about with Euro Swiss. The market continues to be very well supported on dips. We did see several days back a little bit of a sharp drop down towards 106.23, but ultimately the market hasn't really been able to establish any daily closes below the 107 handle and remains very well supported. At this point, there's risk for another resumption of gains back towards the recent range highs at 111.30 to 112. Any setbacks should be well supported ahead of 108, with only a close back below 108 to compromise the constructive outlook. Aussie dollar. So Aussie's rallied up in recent trade to just over 76.50, but the market, as you can see here over the past several sessions, has had a hard time establishing above 76.50, and we could see the formation of a lower top now ahead of the next major downside extension. At this point, there is risk for a break above 76.58, which is that recent high, but we would need to see really a close above 76.50 to open the door for fresh upside, taking us back towards the 2016 high at 78.35. So until we see a close above 76.50, look for the market to continue stalling out. A break back below the low that we saw in Wednesday trade, which comes in around 75.77, would take the immediate pressure off the top side. Dollar CAD. So dollar CAD has seen setbacks in recent trade after stalling out just shy of key resistance at 131.89. 131.89 is significant as it represents a resistance point off a major base. If that level is taken out, then it confirms this base that we've seen over the past several weeks and opens the door for fresh upside towards the 135 to 140 area. But while the market holds below 131.89, more consolidation is expected, though we should see a higher low ahead of a fresh assault on that 131.89 level, ultimately only back below 126.55, which is the anticipated projected higher low, would compromise the current constructive outlook. Kiwi dollar. So Kiwi is once again stalling out after the market rallied up to fresh 2016 highs at 73.25. Rallies over the past several weeks have stalled above 73, and we're seeing the market now trade lower. At this point, next key support comes in around 70.80, and a break below that level will do a good job of accelerating declines towards next key support below there at 69.63. At this point, only back above that high at 73.25 would negate the current toppish outlook for the Kiwi dollar. SPX 500. So the story over the past several days here has been a market that continues to break up to fresh highs, now fresh record highs, as high on Thursday, as early Thursday as 21.75. At this point, we can't rule out the possibility for additional upside now towards next key psychological barriers at 2200. But again, since 2015, the market has shown signs of topping out in the 2100s, and although we've made a fresh record high, there is the possibility of exhaustion here ahead of the next major downside extension. Initially, we need to see a break and close back below recent support around 21.35 to take the immediate pressure off the top side. Gold. So gold is showing a reversal week this week after recently trading up towards 1400 but stalling out. However, as you can see here, there's some really good previous resistance now turned support in the 1300 area, and any setback should be very well supported into that level ahead of the next major upside extension towards what should be a measured move upside extension at 1400. At this point, again, only a close back below 1300 would really delay the highly constructive outlook for gold.